Well, that's the corporate news covered off what we have so far, but of course it's going to be a big week on the macro front as well. Valentine's Day looms as a big one when it comes to CPI in the United States. Will it be a love affair for risk assets or a massacre? Let's go and get a view. Pete McGuire from XM is standing by via Skype. Pete, welcome back to the show. Hope you had a good weekend. It looms large, that CPI report tomorrow night.
Absolutely, David. Good morning. Good to see you. Yeah, I'm not sure whether it's going to be a love affair. We'll just have to wait and see how it drops. Many are tipping that you're going to see it pull back to around about 6.3, wipe 2 ticks off, which is a good, I think, confidence booster. But you've got a report coming out of Cleveland that said it could actually tick higher. So we'll just have to wait and see when it drops and how it drops and the impact it has naturally to dollar and to the markets.
One other area that's getting a lot of attention at the moment is the Bank of Japan, including the new leadership that will come through, scheduled to be in April this year. Give us a sense as to what we're looking at the moment. Ueda is now being flagged as the potential and a likely candidate to go and replace Kuroda. Obviously, Kuroda has been very, very forceful with monetary policy easing. What do we know about Ueda as a personality?
Well, Mr. Ueda's policy is still unclear, David, so that's the issue that we face. He's unlikely to be as cautious as the other potential that threw his hat in the ring, Amamiya, on tightening policy. So that's where we've just got to wait and see how that all flows. We'll get the news and that'll drop, and the impact could be, you could see a steady incline as far as rate policy, and you could see, Japan look at ratcheting up. So we've just got to wait and see how it all drops. What happens to naturally the yen? It's been a wild trade over the last 13 months. From 114 up to 150 and back to 130 at the moment. So if you do see a rate policy change and you see aggressiveness from the Bank of Japan, then you may be looking at that 120 handle.
Pete, we had that wage growth chart up there from Japan. Now, for many, many years, there's absolutely no wage growth whatsoever been coming through, but that's changed a lot. We get a lot of wage negotiations that start to go and come to fruition over the next couple of months. How much do you think the market is priced in the likelihood that we might go and see yield curve control completely abandoned by the BOJ at some point in the near future?
Well, David, there's so many different variables in there that we all have to work through and understand and take on board. And as you mentioned, yield curve, what's happening with wages. You've seen the Nikkei really bounce back strongly over the last 2 years, down from its lows up to now 27, 28,000 sort of headline. So yes, Japan, I talk to Japanese counterparts and they tell me that everyone's getting a wage rise, so that's a positive tone. And how that all moves forward naturally is I think one of confidence, but that really underpins inflation and gets more inflation out there, which the other side of the coin is, higher rates.
I asked about the Japanese economy and what's potentially likely coming down the pipe when it comes to policy settings there, because we know the yen is a very big component when it comes to that dollar index, but it's nowhere near as big as the euro. I'd like to go and get your view about the euro as a prospect from a technical perspective right now, as well as fundamental, because it's been on a trajectory higher. How long do you think that can last for, though?
Well, David, you're sitting at nearly just under 1.07 at the moment. It's had a solid move since October, down from those lows of 96 odd or 0.96. So it's been a dramatic move, and like anything, it's probably shot itself up too high when it reached that 109 handle. It's given back a little bit of territory. The US dollar index has come under a nice charge, running at 103.58, and it's weighted at around about, my memory serves me correctly, about 61% as euro. So yeah, I won't be surprised to probably let's see how the inflation number drops in the States, and maybe you're going to see that US dollar index continue a little bit more move to the upside, David.
Just to go and finish off, I mentioned in the introduction there that we'd seen Russia make a surprise announcement about the flagging they're going to go and cut crude production in the not too distant future. It had a big impact on crude markets on Friday. From a technical perspective, how is both Brent and WTI looking at this point in time?
Well, you've got nearly WTI, David, sitting at $80 a barrel at 79.72, and I've got 86.40 or so for Brent. They both had big moves, 2 and a bit percent up, 2.25. So that's the challenge that OPEC faces, and naturally crude production and consumption, with China back on board. So how does that, if Russia cuts it, and we know that they're an elephant, like the States and like Saudi as far as daily production. So this could really impact energy markets, which in turn if someone's got to make the shortfall, we could see prices escalate quickly from here. So that's what we don't want. We don't want to see $100 a barrel again, David, but it may well happen.
Yeah, we know the implications for economic growth and inflation if something like that happens, so we'll keep a close eye on developments in that space. Pete, we'll go and leave it there. Thanks so much for joining us here on the program. As always, enjoy the rest of the week.
Good to see you, David. Thank you.